Let's quickly get an earnings call in. Sunil Duggal, the CEO of Dabur, joins in to track the earnings this time around. Mr. Duggal, afternoon. Can you just start off by telling us how the quarter has looked for you this time around in terms of the volume growth in your key segments, that is the Consumer Care Division and Consumer Health Division segment?
Well, overall the sales growth has been 14.5%, out of which 2.5% has been price and around 12 volume. So it's been pretty steady along the lines of the earlier trajectories, and it's been quite similar in both the consumer care and the consumer health businesses, around 80-20 split in favor of volume. The international business growth has been almost 100% driven by volume, because the price increases there have been almost non-existent, consequent to the very low inflation being felt there.
Sunil, afternoon. Is there some moderation which is happening in volume growth at 12%? Are things easing off a little bit?
I don't think so. I think, in fact, volume growth should accelerate. What many companies have done is that they have actually taken down prices and built a fair amount of volume growth on the back of price decreases. We haven't done that. We've taken up price increases, albeit by a moderate amount, to 2.5%. But I don't see volume growth tapering off. In fact, I believe when the harvest reaches the mandis later on in the year and the money gets into the hands of the farmers, volume growth should actually accelerate. The pressure is going to be really on margins, because there is every possibility that inflation will not moderate, it will carry on at the current levels, which will put a fair amount of pressure on margins.
That was my next question. How much of a pressure are you expecting? What did you do this quarter in terms of operating profit margins, and what would you stabilize at in FY 11?
Well, our EBITDAs have been actually pretty good, even though our gross margins have contracted by around 250 basis points, but we've maintained EBITDAs at around 22%, which is around the same as what we did in the corresponding quarter last year. And these are about the all-time high levels of EBITDAs. So we've moderated advertisement spends a little bit. We've overall managed costs better, and we've been able to hang on to the EBITDAs. Now, going forward, would be able to maintain them at current levels? Well, I can't really say for certain, because if inflation continues in double-digit trajectory, particularly in the basket of commodities in which we operate in, then the EBITDAs are likely to shrink a little bit. But I don't see that anything very dramatic happening. And one good reason why I'm pretty optimistic about the overall EBITDA profile is that our international business is now showing the EBITDAs in the region of 25-26, and they are likely to continue at that level. So as and when the slice of the pie of the international business continues to grow, it will have a beneficial effect on the overall EBITDA profile.
Can you split up this volume growth between categories for us, Sunil, especially between hair oils and oral care?
Well, toothpaste, we had growth of 20%, out of which I think around 15-16 would be volume, balanced price. Hair oils, we grew at around 12%, out of which around 6-7 would be volume and the balanced price. Hair oils, we took price increases a little bit ahead of other categories. Shampoos did not grow at all this quarter. We believe that from the fourth quarter onwards, the growth would continue. The lack of growth is on the back of very, very high growth in the corresponding quarters of last year. So it's been a mixed bag, but the standout performers have been actually healthcare and home care. And food and beverages have been very steady. Growth has come off a little bit in international business, but I believe it will pick up again in the third quarter. So overall, it's been a mixed bag. A lot of categories have done exceedingly well. Some have underperformed, and that's how it typically happens in every quarter.
Just a final word then on your Turkish acquisition. You said you would complete it by the third quarter. Is that happening? Yes. Will that be completed by then?
That already happened.
Okay.
It has happened. The company, the numbers will be consolidated from the 8th of October. So we'll get around a full 6 months of consolidation, which would add around 3% to our top line. It will not have any margin impact, because our interest costs would be offset by whatever profit we make from there. So it will be margin neutral, and that's not a bad way to begin the acquisition. The real impact of this acquisition would happen in the next year, when we really take off the launch of these products in many of our existing geographies, particularly in Africa. And depending upon the outcome of that, it could have a substantial improvement in terms of at least a top line, and perhaps a little bit as far as our margins are concerned.
Thanks, Sunil, for joining in today. That's Dabur with its numbers. The stock is down a couple of percentage points now at 103.25. The Nifty's just managed to inch its way back about that 6,000 level, 6004, so not quite out of the woods yet. The volumes have touched 1,90,000 crores already, so we are sitting in the midst of a really high volume session. Easily above 2 lakh crores in trade today, maybe well above that. The Sensex is still below 20,000, 19,986. We'll take a quick break, come back and talk about the mid-caps which are moving, and of course the 3 listings which have done, most of them have done very well today. After the break.